Okay, guys, we'll now begin with instruction 2 on problem 2-4A. Journalizing the entries for April. We'll start with April 1st. Paid rent on the office for the month, $6,500. So we'll enter the date, April 1st. Okay, now in the transaction, you want to look for keywords. The first word of the transaction is paid. Now remember we talked about in exercise 2-7, if you see the word paid, then we should automatically know that the cash account was affected. But what did Elite Realty pay for? Well, they paid the rent for the month. So that's also going to affect the rent expense account. Okay. So rent expense for the year has increased. Remember, we're just tracking our expense item for the year. Starts the year with a zero balance. Every time we incur some cost for rent, we increase that rent expense account balance. So expenses increase on the debit side. So we're going to come back here, type in rent expense. Remember, we always enter the debit first. And the amount this time was $6,500. Okay, the other account affected was cash. Remember, cash is an asset. If we paid our rent, then cash decreased. Assets decrease on the credit side. So we'll enter cash, we indent for the credit. And enter cash as $6,500 as well. Our next transaction is the second. Purchased office supplies on account, $2,300. Again, you want to look for keywords. I'd say your keywords here, your first three words say purchased office supplies. Well, that tells me that the office supplies account will be affected. And then how did we make the purchase? Either for cash or on account. This time it was on account. When we make purchases on account or we pay creditors on account, the account that would be affected is accounts payable, our liability account. So here, our two accounts affected are office supplies and accounts payable. Well, if we've purchased office supplies, we now have more office supplies than before this transaction. So the office supplies account increased. Remember, supplies or office supplies is an asset. Assets increase on the debit side. So we're going to debit office supplies for $2,300. Okay, the office supplies were purchased on account, so we know that affects accounts payable, which represents what we owe creditors on account for goods or services purchased on credit. If we've purchased office supplies on account, then we now owe more on account. And I think that should make sense. If you make a purchase on account at Lowe's, then you would now owe more. Your balance on your Lowe's card would now be greater than before you went to the store. So if we make a purchase on account, we now owe more on account. What we're saying is that the accounts payable balance increased. Remember, accounts payable is a liability, and liabilities increase on the credit side. So we're going to credit accounts payable. It's a liability that increased, $2,300. Okay, next we'll go to the fifth, paid insurance premiums, $6,000. We can assume here we're paying our insurance ahead for a given period of time. Typically that's how it works with insurance. You pay for it today and that's for coverage in the future. They're not going to cover you and then let you pay them later. So we're paying our insurance ahead for a period of time, $6,000. Okay, the first word is paid, so that lets us know cash is affected. If we're paying our insurance ahead for a given period of time, then the other account affected would be prepaid insurance. Okay, we now have more prepaid insurance than before this transaction. Prepaid insurance just means premiums paid ahead of time. We now have more prepaid insurance than before. Let's look. Prepaid insurance is an asset account that increased in this case. Assets increase on the debit side. So we're going to debit on the 5th. Prepaid insurance. $6,000. And we will credit. I guess you know already, there's only 2 accounts affected. You guys, it's important to go through these steps and know why you're entering an account as a debit or a credit in the ledger and why you're putting in that amount, because later on we'll be, with these journal entries, we might debit 2 or 3 accounts, credit 2 or 3. You have to know why each time you put one in. So we know we're going to credit cash, but why? Well, let's go back to our other page. Cash, as we know, is an asset. If we've paid our insurance ahead for a period of time, then cash is an asset that in this case decreased. Assets decrease on the credit side. So we're going to put in cash. $6,000. Okay, on the 10th, I like to look for keywords, as I've already mentioned. And let's read the first 2 words. Received cash. Alright, that should tell you that we now have more cash than we did before this transaction. So the cash account was affected. Not only was it affected, we know cash increased. Cash is an asset that increased. So that's going to be entered as a debit for $52,300. Cash is an asset that increased. The increase on the debit side. That amount was $52,300. Okay, now where did that cash come from? We received cash from clients on account. Well, the account that represents what clients owe us on account is accounts receivable. So if customers have paid us part of what they owe us on account, they now owe less on account. So accounts receivable is an asset that in this case decreased. It decreased because accounts receivable represents what customers owe us for goods or services we've already provided them and they promise to pay in the future. So accounts receivable represents what customers owe us on account. Well, if they paid us part of what they owe on account, they now owe less on account. So accounts receivable is an asset that decreased. Assets decrease on the credit side. So we're going to credit accounts receivable. $52,300. Okay, on the 15th, purchased land for a future building site for $200,000. Paying $30,000 in cash and giving a note payable for the remainder. Okay, this is our first transaction where more than 2 accounts are affected. Let's see if we can pick out which ones. Again, look for keywords. On the 15th, your first 2 words, it reads purchased land. Well, that tells me that we now have more land than we did before this transaction. Okay, let's look at our accounts. Land is an asset. We now have more land, so the land account balance increased. It's an asset, they increase on the debit side. So we want to debit land. And remember, we'll put assets on the books at their cost. Well, we paid $30,000 in cash and borrowed the rest, but the land actually cost $200,000. So we're going to put the land on the books at $200,000. It said we paid $30,000 in cash. Well, that tells me the cash account was affected. If we paid out $30,000 in cash, then cash decreased. Cash is an asset, and they decrease on the credit side. For the amount paid out, $30,000. Okay, now again, this reads, purchase land for a future building site for $200,000, paying $30,000 in cash, and giving a note payable for the remainder. You guys, the wording can make this tricky. I think probably jumping out at you right now, though, the third account affected is notes payable or note payable. But the way most people I know would say this is I bought some land for $200,000, I paid $30,000 down, and I borrowed the rest. Same thing that they're telling us here. Just in accounting terms, those borrowings we'll call notes payable or a note payable. That down payment would mean cash went out, and then we put land on the books at its cost. So, how much did we borrow? Well, the land cost $200,000. We paid out $30,000 in cash. So that difference is $170,000. Well, notes payable is a liability, and it's a liability here that increased or decreased. If you said increased, you're correct. We now owe more notes than before, or we now have more borrowings than before this transaction. So it's a liability that increased. They increase on the credit side. So we're going to credit notes payable for the difference, $200,000 minus the $30,000 gets us $170,000, our increase in notes payable. Remember, it's a liability. They increase on the credit side. Cash was an asset that decreased. They decrease on the credit side. And land is an asset that increased. Assets increase on the debit side. Now please note, with that journal entry, total debits still equal total credits. $170,000 plus $30,000. Debit side and credit side are equal. Okay, we'll start back with the 17th in the next video.